All right, guys, good afternoon. Good afternoon. Welcome to our aftermarket recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thank you so much for joining me today and every afternoon, 5 p.m. Eastern Standard Time, where we recap the market and answer some of your questions. Thanks for stopping by. Before we begin, bottom right-hand corner of your screen, little white logo, click on that. Turn notifications, subscribe to our channel, like our videos, share with anyone who may like it. Appreciate it as always. Again, mash that like button if you like these videos. Again, really helps the YouTube algorithm. Thanks again. And don't forget to comment your questions on the YouTube channel. I'm the one who answers the questions personally. So again, any questions, I'm here to help. All right, let's go and talk about it. Dow closed up 214 points, new all-time high. The NASDAQ shed 1.33%. The S&P was down 0.06%, pretty marginal. The VIX gained 1.8% at 1691. The equal weight S&P, we're going to talk about that here in a bit, up today, 0.80. I'm going to tell you why that's important. Small caps shed about 0.15% on IWM, 224.98. The dollar index gained 0.07%, 96.27. The 10-year yield rose today, so that means bonds were sold off, 1.668%. Gold gained on GLD, which is the ETF, 0.74%, 169.57. Silver 21.32. That's the ETF SLV. Credit markets. High yield credit shed about a quarter point, 86.75. Yet investment grade bonds did gain in value, 131.22. Taking a look at the futures side, crude oil did gain 1.49%, 77.21. That did help the Dow. Gold futures gained 0.82%, 18.14 an ounce. Remember that 1800 level was pretty key. We've been talking about that. It's been hovering around there now. Silver gained 1.23%, 23.09 an ounce. And crypto did bid on the future side, 38.30, 3.5% for Ethereum, 46.285, 0.92% for Bitcoin. And gasoline futures, $2.27 on the futures side. So let's go ahead and take a look today. First, we'll take a look at crypto. Let's see how my portfolio did today on crypto. Yeah, up today about 1%. Again, still holding the graph. That's red. Shiba, again, I took some profits on that, but I'm still holding. I still buy some, down 8.61%. And Sushi Swap, my biggest loser, down about 60%. Gained about $1,800 in the portfolio. Nothing has really changed for me. I mean, other than, I bought some GRT today, 5 days ago. Bought some SHIB yesterday, $25 worth. I received XTZ because that's a stake that comes in. Matic bought 5 days ago. And XTZ I bought 5 days ago. I do that automatically I think every week I do that. Take a look at the group screener. Let's take a look at the S&P groups did today. Energy, financial, industrials, materials. We talked about that. When rates rise, the 10-year, again, that's right here. You see it. That is, oops, where is that thing? That is TNX, 1.668%. You can see energy, financials, and industrials do gain in value when bond yields rise. What falls when bond yields rise? Communication services, cyclicals, and technology. Why? Because these high valuation companies, these high beta names, they have to borrow money. Again, they want lower interest rates. That helps growth. When interest rates go higher, granted it's still relatively low, again, that still hits the growthy names. Again, we could see here on the side. Look at the names that were down today. Pinterest was down nearly 10%, 9%. Neo was down 5.65, but had a day yesterday, obviously. Upstart down, Snap down, Square, Roku. Tesla obviously had an amazing day yesterday. DraftKings was down, SoFi was down, Peloton was down, AMC was down, AMD was down, and they bailed the new products. CGC was down, Nvidia was down, GME, football, space, you get the idea. High beta growth names in a rising interest rate environment, they don't do well, usually. So again, those are little hints that you need to start looking at. That's why I always talk about the TNX every single day, because that'll give you a hint on the market. I talked about financials this morning. Again, when rates go higher, financials do well. This is why Goldman Sachs is part of my top 10 of 2022. That's why Caterpillar is part of the 2022 top 10. Those two stocks did well today. I don't think I have Goldman in my list here. Goldman did well today, up 3%. So there you go. If you're following the top 10 stocks of 2022, I'm still waiting on the actual setup, like a nice little picture showing us how we did for the top 10 stocks of 2021. I'll go over that on YouTube. There'll be a video, a separate video. I'll do a separate video for the 2022 top 10, and I'll go over everything with you guys. It'll also be simulcast on the podcast for the 2022 one. The 2021 review, That'll be done just on YouTube. So just a heads up. So that's where we are in terms of the groups today. Let's take a look at the maps, the heat maps. This is important. I posted this on Instagram. Okay, so we know the big boys didn't do well today. Apple slid a little bit, hit a $3 trillion valuation yesterday. Microsoft fell a little bit. Nvidia, AMD, the chips, they fell today, the two big ones. Google slipped a little bit. Facebook slipped. Amazon down 1.69%. Tesla down 4.18%. So again, a lot of the NASDAQ, the heavy hitters of the NASDAQ brought the NASDAQ down. Again, we know the big five, right? Again, that's Apple, Microsoft, Amazon, Google, and then you can throw in Tesla there for number 5, and throw number 6, Facebook. Number 7 would be Nvidia. So you can see how big they're part of the S&P in terms of weight. So now this S&P heat map, this is not equal weighted. This is just the S&P in general. Now the S&P does by weighted. So again, the larger the market cap, the more weight it holds. We can see Apple being the biggest square of the visual heat map. It's the largest company in terms of market cap. What's the second biggest? Microsoft. What's the third biggest? Amazon and Google are kind of like fighting each other for that third spot. And then the fourth slot, you'd have Tesla. Fifth slot, you have Facebook. They're interchange. Facebook would be 5. 6 would be Nvidia. And then you can go basically how big they are. Look at another piece that's big. Berkshire Hathaway. It's a big part, but they had a great day today, up 2.5%. Again, a lot of bank exposure for Berkshire Hathaway, but again, their largest holding is Apple, so we know that. And again, another big part of the S&P, as you can see here, Pfizer is a big part, UNH is a big part, J&J is a big part, Walmart's a part of it, not as big. Netflix, nice little chunk, probably the same size as Disney, but again, you can see the big squares, those are the ones that are the most weighted. So again, when the big weights, the tech, they pull back, it's going to drag the index with it. When they're higher, it's going to drag the index with it higher. So in order to look at both sides, you need to take a look at something called RSP. This is the equal weight ETF for the S&P. All 500 S&P companies are equally weighted. Again, Microsoft is not bigger than McDonald's, and PepsiCo is not bigger than Apple, and Pfizer is not bigger than UPS. It's an example. So they're all 500 companies. All the 500 companies here, imagine they're worth 1 point as an example, or 0.25%, whatever number that it is weighted. It's all equal. So now with all things being equal, financials doing well, energy doing well, materials doing well, industrials doing well, look at the difference. RSP at an all-time high in comparison to S&P, SPY slipped a little bit. So again, the S&P is only what, $2 something cents away from all-time highs. We tapped an all-time high in the equal weight S&P. So again, this is a good thing. Again, you don't want just tech running the show because it becomes too heavily weighted where it's just 5 companies run the whole thing. You can't have that. Again, this is good rotation. This is healthy rotation. Again, these industrials, these financials, these energy companies, energy did great last year. We know that. Rising energy prices, we know that. Banks, higher interest rates, we know they're going to do better. Higher rates for industrials do better. Again, higher paying dividend stocks are going to do well in terms of a higher interest rate environment. On a low interest rate environment, what does well? Growth, high beta names, they do well. So always understand the correlation there. But again, if we can compare both, we can see on the daily, S&P 500, regular weight, SPY, again, we know the top 6 boys, they take a big part of that, and the RSP, which is the equally weighted, again, it looks very similar, but at the end of the day, one's at all-time highs today, and one slipped up a little bit. So again, what does that tell you about the market? It shows you that the 500 stocks are participating in this rally, not just 5 names. It's not just Apple. Again, Apple's done great. Microsoft has done great. Amazon had a so-so year. Tesla had a great year. Facebook had a so-so year. Google had a great year. So again, you're not beholden to just 5 names running the whole show. RSP is telling us the roadmap of the whole 500 stocks, all-time high. That says a lot to me as an investor. So again, you could buy the equal weight ETF if you like to. Again, it's under RSP. I don't own any, but again, it's something to look at as well. There was a couple of things that came out in terms of news. AMD CEO Su, demand remains extremely strong and will continue to ramp up supply in 2022. That's from AMD. Nvidia unveiling more than 160 gaming and studio GeForce-based laptop designs, as well as desktop and laptop GeForce RTX GPUs and technologies. That's from Nvidia. GM Q4 sales 440,000 vehicles, down 43% year over year. GM expects economic growth in the U.S. and improving semiconductor availability to help drive the U.S. total light industry sales from around 15 million in 2021 to around 16 million in 2022. Toyota takes the king's role, the leadership role. Toyota is now the best-selling automaker in the United States. They have dethroned General Motors. A couple of things here. Charlie Munger's Daily Journal has nearly doubled its holdings in Alibaba, according to Bloomberg. Something else here that I saw was a report from the Fed. Well, one Fed voter. I gotta find it here. I saw it and I had it. I think it was Minnesota Governor Neil Kashari. I'm gonna butcher his name. I apologize. Neil Kashari stated that he expects rate hikes this year, and he's one of the biggest dubs, meaning that he's one of the ones that really push low interest rates. So even he expects interest rate hikes. We expect that anyways. The only kind of thing that's in the way of any kind of interest rate hikes is if the infection rate of Omicron goes a lot higher, if we get lockdowns or so. So again, the interest rate debate in terms of the Fed is still up in the air. Nothing has been set in stone. It really is just a day-to-day deal. So again, the market is expecting higher rates. So financials are going to do well, energy is going to do well, industrials are going to do well, materials. And again, tech is going to slide. So let's take a look at TNX in terms of the chart together. And you could see here, the heavy resistance is right here at 1.7. We're at 1668. If we break 1.7, the next level higher is 1765 or about 18. Then you start seeing the industrials, the banks, and all that stuff will start going higher. Again, you may want to pivot yourself into financials. As an example, again, financials are a really good hedge against a higher rate environment. So is energy, so is industrials, so is materials. So just wanted to kind of give yourself the perspective there. Let's answer some questions. Hey, GS. Hey, Carlos. Angie says, hi, Carlos. I have about 7K to invest in VOO or SPY. Should I do it now this week or should I wait for a market pullback? I say when it comes to investing, try not to time the market. It's more about time in the market. Again, this is not really much of a sell-off, to be honest with you. SPY was only down 0.03%. So I say go ahead with VOO or SPY. You can't go wrong with any one of those. Those are both index funds. Go for it. And I think you'll be definitely happy that you did. What do you think about consumer defensives into this year? Consumer defensives, again, we talked about that, like utilities, those names, again, if you expect markets to go down this year, which I don't, then defensives are going to be fine. I think defensives are fine. Costco's a defensive, one of our top 10 of 2022. 2021 defensive last year was Walmart, and that was flat. So again, it's kind of like having cash. Again, I love Costco. I like Walmart for sure. But again, you're not going to get a lot of growth. If you're looking for wealth preservation, a nice, decent yield, yes, defensives are fine. But you're not going to grow a lot, especially if you're younger. If you're on the older side, I would say above 45, 50 years old, then you want to kind of rotate more into defensives because you're talking more about wealth preservation than it is growing. If you're in your 20s, there shouldn't be any consumer defensives in your portfolio for the most part. If not, it should be in a lot more growth. Because again, you have a lot of time for buying earning power down your years. Boomer stocks in demand, right? Boomer stocks. That's what we call value, I guess. Which smaller growth stocks can thrive in a higher interest rate environment? That would be the smaller energy refiners, like an MRO, for example, Marathon Oil. They're part of an S&P. But again, the smaller oil names, crude oil refiners, more of the regional banks, they're going to do well in a higher rate environment. Trading 145 calls. I don't know which 145 calls you speak of. What other defensive stocks are there? Well, I can show you here. It's right here. Walmart, Procter & Gamble, Estee Lauder, Colgate-Palmolive, Kimberly-Clark, Coca-Cola, Pepsi, Mondelez, Altria, Philip Morris, that's tobacco, Target, Dollar General, Dollar Tree. You also have Constellation Brands. You have Archer Daniels Midland Company, Tyson Foods, Cisco Corporation, the Kroger, Kellogg, tons of names, McCormick, Hormel Foods, ConAgra Brands. Again, anything that's in your pantry for the most part are defensive. Stuff that no matter what, people need to buy to survive. Walmart. Oh, okay, so I have to take a look at Walmart. Walmart was down 1.83% today. Did I buy any BABA lately? No, I didn't buy any BABA today or lately, but I did buy it last month. So I'm waiting for an alert below 108.70. That's when I'll buy some more. So again, I'm just looking to buy some more up below 108.70. Not a huge deal. That's a big support level. I mean, if I max it out, you can see we're right below support. So again, 100, 108 seems about a right level to hold it. I want to own BABA. I want to hold it. What do you think about Web3 or DeFi top companies in that space? I don't know much about Web3 or DeFi, so I don't want to sound ignorant and pretend like I know what I'm talking about. That's something I'd have to research. You're welcome. For 2022, the best stocks to buy are financials, consumer defensive, energy, and healthcare with Omicron new variant from finance rising. Well, again, that's kind of the worst case scenario. I think the best healthcare stock for me, and I've been saying it, is United Healthcare. That's the best insurance company to own. If you want to own some Pfizer, that's fine. That's totally cool. J&J is as bedrock solid as it gets. Moderna, again, if you're looking for the COVID VIX index, I say that. When COVID scares are high, Moderna does great. When, everyone's kind of, the world's not ending again, then Moderna's going to go down in a sense. So again, if you expect more of the COVID scares, spikes in infections, Moderna's going to do well. Defensives are going to do well. But again, it really depends on your perspective for 2022. If you think we're going to get back into lockdowns, yes, then defensives, financials won't do well because if we get into lockdown again, we're going to get lower rates. Defensives are going to do well. Healthcare, that will do well. Energy will not. So again, energy is a play in a sense of demand going up. Again, more people traveling, more people driving. If you're in a lockdown, oil prices are going to fall. That's just the name of the game. Remember, it's supply versus demand. That's all it is. Finviz, F-I-N-V-I-Z is the website right here, Finviz. You can literally Google S&P 500 heat map, it'll come up. Have you checked into BA? BA, let's see it. BA, I needed a break of 215. I didn't get it until the morning pre-market. It never tapped it after that. So again, 215 is the level I'm looking for Boeing. That's really the level I'm looking for, and it still hasn't broken it. So once it does, then we can see. But remember, guys, when it comes to sectors and in terms to, it really depends on what your thesis is. What do you expect to happen? If you expect, again, more lockdowns, kind of the worst case scenario for COVID, then again, defensives are going to do well. The online names, the Pinterests of the world are going to do great. Facebook is going to do great. Netflix is going to do great. Peloton's going to do great. Zoom, those names, the ones that did well in 2020, the growthy names or ARKK, the Rokus of the world, they're going to do great. Everything else, like cruise lines and retail, are going to take a hit for the most part. So again, if you're expecting, COVID's going to go away, then again, more of the consumer cyclicals are going to do well. Technology is going to do well. Financials are going to do well. Energy is going to do well. Again, with rising rates, if we do, when things go better, of course, rates will rise, then financials will do well. Hey, Carlos, are you think this week we're going to be red for QQ and SPY? No. I think they're going to be green this week. QQQ was just red today, but it did break an all-time high yesterday, and I think we'll bounce back. Thoughts on Amazon? Amazon, it's just kind of just trading sideways. You can see just not much happening in this name. You can see between 35.54 and around 3,200 has just been a nothing burger for the most part. C is a solid price for the year. I think Citibank is one of the cheaper banks to own. I was looking at the PE ratios. It actually has a very cheap PE ratio. It's cheaper than the S&P in terms of price to earnings. So yeah, Citibank is a good company to own, absolutely. Let's see here. Does the S&P look strong to you? I don't see what pushing significantly higher from this point. Yes, remember we talked about RSP. RSP being the equal weight ETF. They're at all-time highs today, even with tech down. Why? Because it's all equally weighted. SPY, take a look at it here, down 0.03%, down 16 cents. And I think we're acting like the world ended again, or we're going to fall more. Then NASDAQ fell. Yes, true. But S&P was flat because financials, energy, materials, industrials carried the load. And you can see on RSP, the equally weighted ETF for the S&P is at all-time highs. Now, again, do you want to say we're at the peak right now? Okay, well, keep in mind we have earnings coming up in a couple of weeks. So let's see how Christmas holiday did for a lot of these companies. Again, these companies have higher margins. They're beating their EPS estimates. They're doing well for the most part. Now, there's some that are not doing great. Again, that's fine. But for the most part, the stock market is telling me here that even if tech slips, you're seeing the market as a whole doing well. And that's important. Let's see. And yes, the S&P does look strong. Thank you for the question. All right, guys, that's all we got today. So thank you all. Carmen, Matthias, Road to Billion, Akina, Tessa, HGoo, I'm going to ruin that. Belligerent, Angie, and GS. I appreciate you guys, all your questions. Any other questions, type it in the comment section. I will catch you guys tomorrow for the morning note. Have a great rest of your day. Happy Tuesday. Enjoy your evening. Cheers, guys.